Hey guys, welcome to Probate Café, and today we have with us is John Shrum with Arbor Financial Group, and he's going to jump in and share some things about some lending services that he can provide, going through either trust sales or probate sales and or working with beneficiaries. So, John, tell us a little bit about yourself and kind of how you got into this lending gig.
Yeah, absolutely. Thanks, Eric. So I've been lending now. I've been a mortgage broker now for, oh boy, we're going on 22 years.
Wow.
I think I met you back in Countrywide days.
Oh,
right?
yeah.
It was a long time ago.
10 years ago, maybe.
Yeah. So I was a correspondent lender for many years. Also worked on the federal institution side with the Bank of Americas and Wells Fargo's of the world. And then I went into the broker world and haven't looked back because we have so many different options for so many different clients. Being that we have the wholesale side, the correspondent side. We have a box for everybody as long as it's a benefit for someone and we can fit them in there.
Oh,
So,
yeah.
Yeah. So, I still enjoy what I do after 20 some odd years. It's still a great feeling to put somebody into a home or help them out of a situation when they're in a debt situation or something like that. So.
Yeah, and I wanted to invite you to this podcast because you've done some loans for some beneficiaries and things like that.
Correct. Yes.
So share with us, what is a probate loan?
So a probate loan is more of a asset loan. It's a private-based loan that is going to be held with the assets in the estate. And these are typically short-term loans with a good exit strategy. So if somebody is in a probate position, they can have the estate assign the loan, if you will, for 19 months. We will do no prepayment penalty on these loans because we want the option for them to get out. So if somebody's looking to purchase in the probate and they want to be able to do that asset loan, call it more like a bridge loan. So it's a way for the family to secure the loan. And then once that loan has been secured, for another person to come in to either purchase a property or that family member who is now buying that property can go ahead and refinance it onto a 30-year fixed term.
Okay, and you haven't had any issues going through the probate process with those type of loans or anything like that? Or?
Well, there's always issues with the probate process. I mean, I think if the probate, it's more challenging, obviously, than someone who's just coming and qualifying for a loan. But as long as we've got clean title, clean bill of health, right? On my end, that's the most important piece. And we can show that the property will qualify for that bridge or for what we call that probate loan, then we don't have any issues.
Oh, fantastic. Okay.
Yeah.
And basically, can someone, I guess, get a loan on a house in probate? That's the other question, right?
So yes, a person can get a loan for a house in probate, but again, that's going to be a short-term loan. They have to have an exit strategy, right? Mm-hmm. So typically, again, a bridge loan, we'll look at anything between 12 to 19 months of financing on that bridge loan for them. Again, have no prepayment penalty, and with the option to get that into a 30-year fixed type of position. So, but it all comes down to title.
Okay, yeah, title. They're the kind of gatekeepers.
Title's kind of the gatekeeper.
People think it's the lenders, but no,
it's title.
It's title company.
So as long as you don't have a cloud, or we don't have a lien, or we don't have additional things on title that have to be addressed, and of course those can be addressed, right? If it is past ownership on the property, if we had a death, obviously being that it's probate, a lot of that will clear with that person who has passed. If it hasn't, then we can address any back taxes or anything that might be on title that needs to be addressed.
Oh, okay. Yeah. And you work with the attorney through that process?
Correct. I'm
sure you got to work pretty close with them, right?
You do. And that's where we have a lot of communication and conversations with the attorney, because they're the gatekeepers, right? They're the ones they're the experts when it comes to that. And they're going to provide the information that we need that we can get to our title company so we can clear up whatever it is that we need to clear up.
Yeah, they're almost, I would say, the gatekeepers before you even go to court, because they're going to tell you if everybody's on board doing what you're planning on doing or not doing it, right?
Correct.
So they've really got to be on board. They've got to get all the beneficiaries on board and figure out the details as far as who gets paid what in that scenario, like a settlement agreement within the probate almost, I think.
Yep. And hopefully they have a trust in place, so that will help us decide who those beneficiaries are and how we can show the trust basically qualifying for the probate loan as well.
Yeah, you run into those things where some people there's like a trust involved inside of a probate. There's all sorts of weird stuff can happen. Mm-hmm. I'm involved with one of those now where part of it's owned by a trust because somebody had passed away, and then somebody else, kind of passes away right after or something. It's really weird.
Yeah.
And you're stuck in, it can be convoluted.
Yeah, absolutely.
And did we talk about how does someone qualify for a probate loan? Is this like, what are the requirements? Is it like a cash loan where they've got to put down a substantial amount of money to qualify? Because a lot of times the people, they don't have the money. It could be someone living in the house. That could be a son, daughter. Maybe they've lived in the house forever. I've also heard where if they can make the mortgage payment, if someone passes and they live there, they can just kind of assume the loan.
Correct. That's actually what I was going to say. The very first thing they probably want to look at, as much as we want to do a loan for them, they might want to look and see if that loan can be assumed. If it's under Fannie Mae and Freddie Mac, depending on the size of the loan, typically those loans, I don't want to say typically, the majority of what we've seen in the past, they can be assumed. But that's when it's falling into a conventional conforming loan amount.
Okay.
And a true 647-200 if you're in Southern California, right? So if it's under that amount and if it's owned by Fannie and Freddie Mac, typically those loans can be assumed.
Yeah, that's really interesting because I think that's is that a new change in the last probably 5 years or 10 years?
Yeah, we've seen more and more assumptions probably since the pandemic. After COVID, after the pandemic, we saw a lot of loans being purchased by Fannie or Freddie. But even though they're assumed, they've got to be able to show that they have the ability to repay that loan. They have to be able to show that they can actually make that mortgage payment. So they're still having to qualify, but they're not having to qualify full documentation. They're showing that they can take over basically that loan balance. So obviously we're not going to sell, right? There's not a down payment. There's not an exchange of money. So
sure. Now, what about ratios? Does that come into play, or is it that out the door now at that point?
Well, on an assumption loan, the ratios are going to come into play. It's going to be just like any other Fannie Mae or Freddie Mac loan. You can't exceed a certain debt to income ratio for that loan to qualify. So I would say if someone's not wanting to purchase the property, right? They want to assume that loan from Aunt Mary or whoever it may have been, and they're claiming that they're a family member through probate or whatever it may be. Then they can assume that loan, but they have to qualify for that loan just like anybody else.
Interesting, yeah. It's I've had a client that he wasn't sure if he'd have to sell, and then we talked with the lender and we found out that he could assume it. But they are also, when his mother died, they weren't making the mortgage payments for about a year. So I guess they had some mortgage assistance kick in that took care of a lot of that. I didn't know what the extent was, if they added onto the loan or if another party or some association or some division of the California government paid that for them to start kind of at a clean slate and just keep paying. I don't know if there's situations.
Some type of modification or something like that, maybe.
Yeah, it was a modification from what I remember, but they didn't have to pay that full year, or maybe it added to the loan amount. I'm not really sure.
Interesting.
But there's some interesting things that happen that
there's always interesting things that happen, right?
Oh yeah, and people they need to understand it's never the same. If it was the same, no matter how many deals you do, there's always something a little different that we have to deal with, and that's what people don't understand. They think we all do the same thing, that we all bring the same value, and that's completely inaccurate until they really kind of see. But a lot of times they don't see the back end, right?
Yeah, absolutely.
It's us being stressed out on something, trying to figure out something, how we're going to make the underwriter happy, or how we're going to do this and that.
Yeah. I always tell my team there's no such thing as a cookie cutter loan anymore.
Yeah.
There is no cookie cutter anymore. So you have to be creative, and you obviously have to be very meticulous, crossing your T's and dotting your I's.
Yeah, definitely.
So, yeah.
And then why would somebody consider a probate loan?
Obviously if we're looking at a probate loan, hopefully they're going to be getting that property for a little bit less than what they would get on the regular market, right? A probate loan, also if someone's coming and buying a probate property, a lot of times, let's face it, the property is probably not in the best outlook, or it's not been upgraded and that kind of thing. We can also look at doing renovation loans on a probate loan. So as long as we can show, again, clean bill of health with title, then we're basically, on my end, we're looking at it as just any other purchase. And maybe they want to put some lipstick on that property.
Yeah.
Or maybe there's some things that really need to be done to the property to make it livable. Then we can do that through a renovation, 30-year fixed loan, and that is a conventional loan. And they can go ahead and close on their purchase and then start the renovation literally after they close on the purchase.
Now, that's also for example, like a beneficiary that wants to keep the family home and not sell, right?
Yeah, they could do that as well, yeah.
Because it's interesting. I'm in a few of those situations now where it was a family home, and one of the beneficiaries, who's the administrator, doesn't want to sell, and they're about to be removed from the probate as the administrator because they're not acting, and the other beneficiaries want their money.
Sure.
So interesting thing where, I don't know if she would be able to qualify the administrator and rent out that property. Would, for example, the administrator be able to qualify for an investor loan going through there, possibly going through probate, and with like the 30% down, 40%, and keep the home? Or
So that definitely wouldn't be the renovation type of loan, right? But if they wanted to, if let's say, so the beneficiary, the trust, the family wants to be able to keep that property, then we're looking at if they want to do an investment property. Yes, it is possible. They are more than likely going to be looking at more money down. But these are, again, our bridge loans. So you got to remember, the bridge loans are they're a private money portfolio, if you will. It's not necessarily private money, but it is a portfolio product. And it's specific for someone with a short-term goal with an exit strategy after that short-term goal. So it's not so much about the client qualifying as it is more about the property qualifying.
Okay.
So if we have a primary and we know it's going to be turned into investment, or like you said, the family wants to hold on to the property and they want to turn it into an investment property or whatever it may be, then we know that that property will cash flow. Very important. We'll look at a debt servicing ratio to see if it will cash flow. And then we can do that on a bridge loan if we hit a certain percentage.
Oh, okay.
Yeah. And they're looking at a minimum of about 30% down if we're trying to go investment.
Okay.
Yeah.
And I've heard of some of these companies that will actually assist the heirs buyout, or they'll give them money up front, things like that. And the interest rate's probably 30%. It's crazy.
Yeah.
So I know, buying out other heirs and beneficiaries, how does that come into play? Do you have any experience in doing anything?
So I researched a little bit, and those are more of your estate sales, right? Is what we hear, and you'll see a lot on the internet. Hey, this is how you can do a probate loan. We're an estate. We'll buy out basically buy out the family members. But you're right. Again, I mean, that's private money coming in, and they're basically financing that property almost like a rent to own, I guess you could call it in a way, right? But you're right. You're paying pretty astronomical amounts when it comes to that interest rate and the percentage. I don't know enough about it to be quoting on it. But I know that there are estates that will come in and basically just buy out the entire estate, right? Buy it out of the probate situation, or whoever's holding the paper or holding the note.
That's my experience, and there's a few companies out there that will reach out to the beneficiaries and either buy them out or front some money, because a lot of times they won't have money to live, but they live in the house, and it's like, okay, well, here's some money up front, and we'll become a creditor or whatnot. And the interest rate is probably about 30%. It's a lot. And there's also other companies out there that it's funny, once the probate is filed, there's companies that'll actually do it's kind of skip tracing, where they'll find relatives that you may not know you even had. A long lost relative that got married to someone and then they got a divorce, but they had a kid, and they end up showing up knocking on the door of the estate or the probate saying, hey, I'm entitled to 1/8 or whatever it is. So it's and they'll charge. What's interesting is they actually will find these people and they'll reach out to the people and say, we found this, you're entitled to some estate. It's going to be worth, say, for example, $150,000, but it'll cost you 30% for us to give you all the information and tell you what it is, or 25%. And I think that's about typical. It's usually like 25% to 30%, somewhere like that.
25% on the sales price, or
no, on their value.
On the value.
Yeah, because this other person's like, okay, well, I never knew I was going to invest or inherit $150,000 or whatever it is, and I'll pay you if you give me all the details where I can go collect my money. I'll sign this paperwork, and I'll pay you your percentage off that. I think there's a couple companies. I think one is in New Mexico or something, but you come across them every now and then because your clients tell you, they were found by this company or that company. But
it's just legitimate.
Oh yeah, they're like skip tracing companies. And I think it's probably it might be more of 20 or 25%. But it's like, hey, we'll tell
100, 150,000 though. So
something like that, and they'll put you in touch with where to get your money, I guess, or where you can put a claim in.
Interesting.
There's all sorts of weird stuff going on. And
well, see, that's the scary part about probate, right? Anyone can come out at any time and try to say that they've had some ownership in this property.
Oh yeah, and if you're somebody out there that if you don't have family, if you don't have a lot of friends, and you're watching this, or you know somebody like that, they could leave their estate to anyone and or no one. If you don't have a trust or anything set up, then obviously the government can can take your money and it'll go to the state because you didn't leave it to anybody. So nobody's really entitled to it. So it's even best even to leave it to your dog. At least maybe the SPCA or somebody else gets the money to support the dog.
Yeah.
But if I've seen that happen where it'll just go to foundations and places like that if one does not have anyone to leave it to, but it's in their will.
Yeah.
So I've seen that happen. So if you're someone that doesn't have a lot of family, then definitely set up your trust with your will, and it's important, because otherwise the state's going to take your money and no one else gets it. You might as well donate it. I think someone's for a good cause, whatever your cause is. But just my 2 cents on that. But how about
I learned something. I always like it when I walk away and I've learned something. So yeah.
And then what about taxes too, as far as preserving the property's existing tax base, right? So there's that step up basis and things like that.
Correct. Yep. So I mean, under the Proposition 58, that does allow for those taxes to be transferred. So again, and it's always case by case, right? So I tell folks, if we're looking at, very most important thing is for us to get a foundation, and from there we can look at whatever option is going to be best for whoever is trying to either hold on to the property or sell the property, or the person who's going to be buying the property. There's going to be so many different options out there.
Yeah. And tell us about maybe a story that you have, something that's a horror story, something that people can actually learn from, is to think about if they are in that situation.
Yeah.
They'll know how to handle it maybe.
Well, I have one, and this is kind of the reason that I tried to become as much of an expert on this subject as I can when it comes to, trust, probate, how to buy, how to sell, how to qualify, what type of loan products can we offer to these folks. So my mom passed away at a pretty early age. I was only in my 20s, and she had a property that she owned in Tennessee. And for whatever reason, it was never mentioned in the trust, was never put into any information. And not to go into too much detail, but my parents had divorced, and she was with another gentleman. And unfortunately, she passed away. And when she passed away, she left quite a mess. And the property ended up going into probate. And you really learn about people that you don't really know too much about when you're put in that type of situation. And I can say the gentleman who my mom was engaged to be married to, we found out a lot about him. We found out a lot about the additional family members that we never knew. So it was about a almost 2-year process to remove all of the gray area from the probate. And after everything was said and done, I think we took a loss of probably about $25,000 or $30,000 on that property.
Oh, wow. Okay.
But more than, it wasn't so much about the loss, it was about what we had to go through. And I thought, and of course, myself and my brothers, if she would have had that in the trust, which she never put that property in the trust for whatever reason, it was never protected, it wasn't in the will. If that had been done, how much more cleaner that would have been. And especially in that time when you're going through that loss and everything that you're going through. That's why I feel for families when they're going through that, right? You've lost a loved one, or something has happened, and now these people are coming out of the woodwork that you really don't know. And they have no claim, but they're still trying to put their name on it and saying, nope, I'm your second cousin twice removed, or whatever it may be.
By marriage or whatever.
By marriage or whatever. And, and the property was located in Tennessee, so we had to make trips back and forth from California to Tennessee. So time spent, a lot of heartache, a lot of emotion, and I think if people, just to protect your families, right? Try to make sure you have that vested. Make sure you have it in the right place so you don't end up in that type of situation on a probate. But if it is a probate sale, then we have loans that we can help you with.
Oh, yeah. And then you educate your buyers usually on every closing to establish a trust, like I do as well, because you never know what's going to happen, right?
Yeah, always. And then I try to follow up with them after the close too, because a lot of times they get very excited. A lot of these folks are first-time home buyers.
Oh, yeah.
And they're just super excited that they actually got their keys, moving into their home. And then it's those things that kind of fall to the wayside. So we try to coach them throughout the process. We have trust attorneys, obviously, that we work with that are partners to me, or partners to the team, and we try to encourage them to reach out and have the customer reach out to the attorney to get that trust going before they even are at the closing table, right? So they're ready to go once they're at the closing table, so they can sign their trust paperwork right then and there.
Oh, yeah.
And it's just Yeah, go ahead.
Oh,
Yeah.
no, that's the key is like getting everything done because a lot of people will put it off. I'll find that as well.
Yeah.
Oh, we just did this. I'll get to it when I get to it, and they never get to it.
Yeah.
So if you're watching this and you just bought a house, you're buying a house, or you own a house and you don't have a trust set up, just get a trust set up. It'll save you a lot of headache, hassles. Reach out to me as well or John, and we can refer you somebody competent. You probably don't want to go with an online kind of document prep center because, there's all different things that come up, right?
Yeah.
You may want to leave a portion here, and there's challenging things to come up. For example, I always say, if you're going to leave something to your kids and one of them gets married, then they get a divorce, and then that other person leaves with half of their inheritance. There's a lot of things that you got to think about that these online companies that may not be able to think about. A lot more questions that go deeper in the situation and long term.
Yeah.
So I always recommend that. And speaking of trusts, so kind of tell us a little bit about, your experience in working with trusts as far as having a trust buy a property, because a lot of these people will have, they'll have the property in a trust, right?
Yeah.
And some of those trusts, and I don't know if it's a business trust or it's the trust that people hold their assets in, can those trusts, either one of those, purchase a property, and how does that happen?
Absolutely. So we have a lot of folks that will have multiple properties in, say, a living trust. Or maybe we have a child member who wants to buy a home and the parents have everything in a trust. They can absolutely close in the name of the trust. Typically, we'll see an LLC or a corporation tied to that as well. A lot of times, a trust can also be used as an income piece to qualify, which is completely ethical under Fannie and Freddie Mac, and we could talk about that maybe at a later date. But it's not unusual, and we see it more and more today than ever before that we see properties in the trust name.
Oh, yeah.
And it used to be way back in the day that you would have to close in your personal name, and then you'd have to flip it over to the trust. In many cases now, we prefer it to be in a trust because there's more protection for the property. There's more protection on our end. There's more assets typically when someone has an existing trust. So.
That's interesting because I do work with a lot of sellers, whether it's probate or trust sale, and my buyer experience is pretty limited.
Yeah.
So I never knew that, for example, you're closing escrow and they can set up that trust during escrow, right?
Correct.
Is that what you're saying?
Absolutely.
And then instead of it going to their name, and it'll go right into the name of the trust.
Correct. Title can be held in the name of that trust.
Oh, that's a lot easier because I just,
Absolutely.
I closed on my house and I had to go, it was in my name, and then we had to fill out the paperwork for the county to transfer it in the name of the trust. And then it was just, they sent it back to me, hey, clarify this here or there. So,
Yeah.
But there's always that chance of it being reassessed, right?
Yeah, yeah.
So
There
if
is
you're
a chance.
listening to this, if you're shopping for a house or buying a house, get your trust set up at the same time because it's going to be a lot easier. You don't want to risk anything, right?
Absolutely.
I mean, that just makes a lot of sense.
Yeah. Yeah.
Wow. Okay. See, I learned something new too.
Yeah, there you go.
Wow, I never knew that. Well,
yeah.
I work with a lot of sellers, so typically selling probate trust properties. So I don't work with a lot of buyers. So
And for a lot of folks that have an existing trust, we do allow addendums. So I'll
Okay.
see a trust and we want to add that property, or we may want to add additional assets to a trust after they've had a conversation with their trust attorney. Then we'll do like a Schedule A, like an addendum to that trust.
Okay.
That's a very simple conversation with the attorney. So the attorney's not going, hey, what are we doing? Why are we adding? What are we doing? Having that conversation with the attorney saying, hey, we're just adding this property to this trust under the family name, right? So Tim and Sally are buying their first home, but mom and dad want to secure it and make sure that it's protected under the family trust. Then that property can be added into the family trust, and the property can still close in the trust name under title.
Interesting.
Yeah.
Interesting. Yeah.
Yeah.
Wow.
Yep.
Good information. Thank you. So also tell us a little bit about refinancing property held in a trust. How simple is that? What's involved with that?
It's actually not very difficult. Again, it's going to be treated just like any other refinance. I mean, it really is. So we have to make sure that the trust is up to date. We may have a trust cert that needs to be filled out. Mm-hmm. A lot of people, when they say, hey, I got to see a copy of your trust, makes people cringe because I've seen trusts that are 200 pages. I've seen trusts that are 15. So to try to narrow down that amount of work, and depending on whether we have to get the attorney involved or not, we'll ask for a trust certification. And it's very basic then. What type of trust is it? Is it a living trust? Is it a deed in lieu? What type of trust are we looking at? And then what kind of assets are we looking at in the trust? That's really basically all it is. So,
Yeah, I see a lot of that when we list a property too, that we'll need that for escrow. But, the cert is basically the condensed version, so it doesn't have all the personal details
Yeah.
for what's going on inside the trust
Correct.
and the will and everything like that.
Correct.
So that's
Yeah.
okay. Interesting.
Yeah.
Interesting. And why would somebody want to refinance a property in a trust? I mean,
Well, I think anytime you're refinancing, it should be a benefit to you, right? So it may be that they're coming out to do like a debt consolidation. It may be that they're just looking at the different market and rates have dropped back down again, and they want to refinance that. Or it may be that they want to add family members to an existing loan. So if they're refinancing, the definition of refinancing, right? Refinancing is obviously we're putting a brand new note, a brand new loan amount. Something's changing on that note, or the investor is changing, the lender is changing. If somebody wanted to just be added to a property, then it's very simple just to have the trust protect that property and not necessarily need to refinance it, right?
okay, yeah.
So if somebody comes to me and they're refinancing, obviously there's a different reason just for the trust. But if they're in a living trust or they're in a trust and the property is already vested in the name of the trust, it's very simple to do a refinance.
Oh, interesting.
There's no
Okay.
challenges there.
Oh, good. Okay.
Yeah.
Yeah, it's always, people think it's more than it is, I guess, but you have a handle on it.
I think people do because they're just they're not used to it, right? Because a lot of people, we see more and more today, we'll see when we're looking at title or we're looking at someone's portfolio and we're talking to them about all their properties, and it may be family, legacy, whatever it may be. We're seeing more and more that these properties are now in trust, but it's because people did it after the fact. Right?
Yeah.
They bought a home, then they went to their trust attorney and they said, hey, we have a living will and we want to make sure all of our assets, including all these properties, whatever they may be, are included into the trust. And that's where we see it more today when they're coming back to either refinance or to add a property. But our world has become much more simple where we can just have them close in the name of the trust, right?
Nice. Yeah.
So it doesn't
That's
have
so
to be
much
done
better.
down the road. So
And then when they want to take a property out of a trust, I mean, with involves a loan, how does that affect the loan and everything else?
well, the people that are on the mortgage are always going to have the primary ownership, right? So even though it's recording in the name of the trust in name of Tim Smith Family Living Trust, right? They still have, even if they remove it from the trust, they're still going to have ownership in the property. Obviously, they're still going to be on the mortgage. So it's not going to affect the note. That's probably the most important part. Doesn't affect the note.
Okay.
How they hold the deed, they can have that. I mean, you can go in and record your deed of trust after you close to Mickey Mouse if you wanted to, right? But as long as the note doesn't change and the names on the note doesn't change, then there's no repercussion from doing that.
Now, what is your process when somebody does a refinance? Because a lot of times you'll hear the story about, well, they did a refinance and they never put the home back in the trust. So do you have safeguards involved with that you do personally that kind of set you apart from other lenders?
Well, we can only control what we can control, right?
Okay.
So, but at the end of the day, if they're following direction, if they're telling us if they want it closed in the name of the trust, then from the very beginning, when we're taking the application, when they're going through the system, when they're going to processing and going to submission for the loan, that should be noted that they're closing. If we get to the closing table and it still shows that it's not recording in the name of the trust, obviously somebody missed something somewhere, right? But if they decide that they do not want to, that's entirely up to them. So typically, we're going to check. Obviously, title we're going to let them know that this is recording in the name of the trust. An underwriter does have to review a trust, so there is that piece. But if we have the if we have the trust cert, then they're only reviewing the trust cert.
Oh, okay. So that's okay.
Yeah.
Do you find that, obviously, you know a lot of lenders out there, do you hear the stories of if you have an inexperienced lender doing a refinance or a purchase, do they even bring up those issues?
You know, I would
find
hope
out.
I would hope they would.
Yeah.
But obviously everyone is depends on their level and what they're doing for the customer. I think it's become part of what we do on a daily basis at Team Shrum, with my team, just because it's kind of ingrained in us.
Oh, yeah.
Because it's just one more way to protect that client. So, but it's very easy to uncheck a box or not check a box in my world.
Yes.
And it's very simple to just say joint tenants in common, right? That's probably the most common way that you see title held on any loan is joint tenants in common.
Right, because we can't advise on how to hold title. We just present them the paperwork to say
Correct.
these are the different ways to hold title
Correct.
because we're not lawyers.
That is correct.
And if they don't have a lawyer to consult, they're not really sure
Correct.
how to hold title.
Correct. Now we can, when we're doing the application, because that's part of our application process, we can ask them those questions. We're allowed to ask them those questions.
Oh, that's
and
good.
typically they will go, I don't know. And that's when we ask the question, well, do you have a trust? Are you working with an attorney? That kind of information, right? And then obviously we're not attorneys.
Yeah.
I don't want to be.
Yeah, no.
Just way out of my pay grade. So that is, if they start asking those questions, that's when we'll refer to a partner
Yeah, and then
and have them answer those questions for them.
right, and then so your experience, you're doing probably 10 to 20 loans a month at the minimum, right?
Yeah.
So you've got that experience where you're doing a lot. You're not just doing 1 or 2 loans as a hobby business. You're in this. You're a full-time lender. This is what you do.
If I was doing 1 or 2 loans, I wouldn't have a company, right?
Right. So if you're in a situation,
Yeah.
and where can you assist people? Is it California? Is it nationally?
So we are licensed in the majority of the states out there now.
Okay.
We don't play in the New York area, right?
Okay.
Rhode Island, another one that we don't. So, but the majority of the states we are licensed in now. So important to make sure that you're licensed. Obviously, you have to be licensed in the states that you're working in. But yeah, we can cover pretty much everywhere.
Oh, that's really good then.
Yeah.
Okay, so they can reach out to, and we'll post your information with this
Sure.
this podcast, so they can call you and reach out to you for questions and things like that. Anything else you want to share?
No, I just what I would tell folks is that there's always a solution. It just depends on how it's going to benefit you. For us, it's building a foundation, whether it's a probate or whether it's looking at the trust or qualifying under a trust or trying to figure out what we can do with that probate. There's going to be options. Just make sure you're looking at the best options that you can and educating yourself. Always educate yourself. Always get a second opinion. Don't listen to the first guy. Get yourself a second opinion, especially when it comes to different loans out there, because it's important to know that you're being taken care of, and that you don't end up in a worse position than when you started out. That's very, very important. So,
Yeah, and I can vouch for you, knowing you for 10 years.
I appreciate that.
So if you need John's services, reach out to him. Again,
Yeah.
if you need a referral for a great trust attorney to set you up, reach out to myself or John. We'll put you in touch with the right people that actually specialize in estate planning. Hey guys, I hope you're enjoying the content you're watching or listening to right now. And if you'd like, please subscribe to the Probate Café channel on Spotify or check us out on YouTube. We've got a lot of valuable information that we share, always keeping you updated in the field of estate planning. Thanks for watching.